Alright, ICT traders, welcome back to the channel. Did you know that one of the easiest way to get the directional bias of any asset, any currency pair correctly and accurately is by simply doing a top-down analysis on that particular asset or that particular pair? So in today's video, I'll be doing that on gold because quite a number of you people have reached out to me in the comments asking me to make a top-down analysis on gold. So let's go into that. Now, I'm an intraday trader. I don't want to look at the monthly time frame or maybe the weekly time frame. I operate on the daily time frame downward. Sometimes I look at the 4-hour and it's enough for me to get the data I'm looking for, because top-down analysis has to do with getting the correct and accurate data. So let's get into that, guys. So this is gold. Now, do I always need to check the dollar index if I am analyzing gold? Of course. Why? Because gold is paired with the dollar on this particular pair. So you need to watch what is happening on the dollar so that you will be able to accurately predict what is happening on gold. It's as simple as that. Now, looking at what we have right here, we are on the daily time frame gold. So from all indication, we've seen that price have traded. Let me show you closely. So you just have to look at the chart and know what is happening from the look of things. So we've seen price have traded from here, boom, 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 up to this level. Now it didn't just start trading. It actually traded into this fair value gap down, even though the fair value gap was initially mitigated, but it traded straight into this bullish order block. All right. Price have been trading bullish all through this journey. Break of structure, push up, retrace. We never had any break of structure. We saw price came here, retrace, couldn't create a low. We saw price push again. We have created a low here, but then now we push up, sweeping liquidity above this relative equal highs, and then it also traded into this liquidity area. Now you need to understand the locations or where we have high potential of finding a lot of liquidity. Now look at this. Liquidity starts from the body up to the topmost part of the candlestick. So if we say liquidity have been swept here, we are right. It is not only when price trades above the high that you swept liquidity. No, liquidity starts from here, the body of the candle, up to this place. And look at this wick also. There is liquidity resting above it. So that's basically what you need to look out for. So price have been moving up. Now you can look at this area as a resistance area, a high resistance area where we expect price to basically retrace. Now you will see reasons why we need to look at that in this manner. We don't just go above like this straight way. We have just found a range, which we've seen the first touch. You see, price has just touched it again. Now we are touching it again. We expect price to retrace. This is just basic analysis. Now, if you look at what is happening on the dollar, that is DXY. If you have DXY, you need to also look at what is happening on DXY, the daily time frame. What has happened and how is that important to you? So DXY is currently bullish. It's currently bullish from this recent data. We have a break of structure to the upside, break of structure here, and look at what price did. It came back, created inducement here, that is sweeping liquidity and manipulating people here, reaching this bullish order block. And now we are seeing price printing bullish sign of movement. This was the news that came in on Friday. So it actually thwarted the initial direction of the market, trading into this rejection area, and boom, we are crashing. But we have high chances that price is going to print bullish on the dollar because initially we've seen price going up, every sign that price is going bullish. And this is the area we need price to clear before we say the dollar is bearish. So we are now bullish on the dollar. So it is very much okay to expect gold to go bearish. That is why we are looking at what is happening currently in the market. So let's go to the 4-hour time frame. It's important because that will be one of the steps that will help us to get the directional bias correctly. So look at this. We've seen that price have traded above into that liquidity area, but then do you expect price to keep printing a bullish candle forever to the upside? No, definitely. Price will always seek a better location before pushing up again. And that is why it is important to understand what exactly is liquidity void. Now look at this. Price move up. We've seen small push down. Now I would prefer to do my, swing low, swing high. So the minimum area we want price to come to before we go bullish is this area. You see, below this 50%. This is a Fibonacci tool. I just used 0%, 50%, and 100%. If you go to the settings of your Fibonacci tool right here, you can basically see all the data. So all you need is to tick 0, 1, and 0.5. 1 is 100%, 0 and 0.5 to get the accurate data. Right here you can see above, below. So anything above 50% is called premium area. Anything below 50% is called discount area. So for you to go bullish when you have price already pushed to this area, it's not rational for price to keep going. It needs to retrace, and this retracement coming down here is what we are waiting for. So that is why I'm saying that the dollar is currently going to be bearish to actually fill up this liquidity void. This empty space is called liquidity void. So for us to be able to do that, there are two things we must do. Where is price going to come to if it is going to come down? So two places. First is this bullish order block, which will take some time, or secondly, this bullish order block. We have the first order block right there. This second order block has not been mitigated, so it is at the extreme, and it is more rational for price to come here, or we can prefer to see price come here and then go up. There are basically two ways to do that. You can easily wait for price to come lower to this place on the 4-hour time frame and be patient, which will take you 1 day, 2 days, or 3 days. But if you want to take advantage of it, you can simply trade bearishness that is going to happen and go bearish until price reaches this point of interest. It's called POI. All right, all these areas. So you take advantage of this move down, which is so many pips. Let's see, almost is that 300 and something pips. Is a lot of movement that you want to take advantage of. So for us to accurately get an entry, let's go to the 1 hour time frame again. You see, I'm navigating different time frames to be able to get what is best for me. Now on the 1 hour time frame, we have the same thing, almost the same area. So this is where a lot of people get it wrong. They get confused when it comes to delineating market structure or understanding where price has traded, or the point of interest, or even institutional reference points. Look at this. The last time we've broken structure was here above this guy. All right, this is not a valid retracement. We've just pushed up to that area. Now we're expecting price to come down. If we are marking this place as our break of structure to the upside, if we go to the 1 hour time frame, we're going to have new place that will be a place we can refine our market structure delineation. So if you go to the lower time frame, you can find another area that you can use as your break of structure, which makes it more refined. For this time frame, this was where we've broken structure the last time. We have started from here. Okay, this is also a break of structure to the upside. This small place, all right, this small place is also a break of structure to the upside. So we are waiting for price to come back to where this is now our order block on the 1 hour time frame. This bullish order block, all right, is what we are looking for. This bullish order block, because it's a sell candle, and that was where price have started this upward movement. So we are waiting for price to come lower to fill up this liquidity void, guys. It's important. And you also have a fair value gap here. All right, price is just going to trade down. So for us to take advantage of this push down, we can also go to the 15-minute time frame and wait for a shift in structure. Shift in structure is important. Immediately, if we see a shift in structure in the 15-minute time frame, we can take advantage of the sell. Look at this. We have this. Boom. A shift in market structure to the downside. Now, time and price is important. What is the time now? What time did we see this shift in structure? Is also important, guys. What time? The current time in the market now, we've just finished Asian session. We are entering into Frankfurt, London. And you can actually see that price is slowing down. London will give us the movement that we are looking for us to be able to take this trade for the sell. So if we are taking out this area, we want to see price push lower into this point of interest. All right. So this is the only basis of our prediction. So if you are doing top-down analysis, you must be able to jump from one time frame to another, the reason why price must go there, and why you need to trade it in that pattern. It is as simple as that. So I'm expecting to short the gold, except for anything. I'm expecting to go bearish on gold, and it's important I do that. So don't forget always to also check your economic calendar. It's the last thing you do to be able to know what is going to happen. For today being Monday, there is no any serious high impact news. Swiss franc has CPI today, but it's not what we are trading. We are simply trading gold and the USD. So we need to just watch out for what is going to happen here. We've shifted structure. We are expecting price to push bearish. That is as simple as that, guys. I hope this helps somebody out there. You can simply go and watch it again and again to be able to understand. I jumped from the daily time frame. Starting from the daily, I went to the 4 hour, hour, and I went to the 1 hour, then came down to the 15 minutes, all in a bit to get it correctly. All right. Thank you guys for watching. I hope this video helps you a lot. If you have any question, let me know in the comment. Thank you. See you in another video.